Welcome. Let's talk about the economic survey released in 2023. We'll be covering the economic survey in three parts. The economic survey has 12 different chapters. So what we would cover is the set of first 5 chapters in this part. The 2 chapters on social infrastructure and climate change are important. We'll cover that in a separate second part. And the remaining chapters on services, agriculture, industry, we would cover it in the third part. So this is the first part of the economic survey 2023. So let's begin with the key highlights. The first section is talking about the complete recovery after the pandemic, focusing on the medium term growth outlooks, the fiscal developments, how we have managed the monetary and the financial things, and then the inflation in India. So coming on to the very first thing, which is the state of economic development post pandemic. So how not only India but the global economy has been battling through these years, starting with the pandemic, followed by the Ukraine Russia conflict, which led to huge inflation in the food prices, inflation in the oil prices, the economic challenges globally which are affecting the growth in India, and how India has turned out to be resilient, the outlook for the same. So if we compare the financial tightenings across the various advanced economies and the emerging market economies, we would see that the financial tightening has been very severe in US as compared to Japan. In India, it has been less in comparison to Indonesia. Mexico and Brazil, both of them have been on a high trend, but the tightening condition is relatively less in Mexico as compared to Brazil. And then we have the comparison for European region versus the UK. If we talk about the medium term growth outlook, we would focus on the India's reforms, Sabka Saath, Sabka Vikas, the Amrit Kal in India, the returns to economic and structural reforms which happened after 2014, and then the growth magnets which have been important for this decade. So the first important thing is, when we are talking about efficient allocation of resources, this comes with ease of business and ease of living. So 4 important things that we focus on. One is how much participation is there by the private sector, the production in the agricultural field, how trustworthy the governance is, and how many public goods could be created. If we compare the two periods from 1998 to 2002 versus 2014 to 2022, there have been differences. When it comes to the shocks in economy, during the 1998 period, there was nuclear test, sanctions were in India, successive 2 droughts were seen, there were balance sheet issues that were seen, and after the 9/11, the US recession impacted India. However, in the recent period, the issues have been different. The main issue has been the non-performing assets by the banking sector. So corporate sector balance sheet stress is one of the major aspects. And the next is the shock by the pandemic, which has led to a global inflation. Now, the structural reform during that period versus this period have been significantly different. During that period, it was mainly privatization, deregularization of interest rate, infrastructure was focused. However, as of now, we are talking about tax reforms, GST, bringing in financial inclusion, maintaining unique identity through Aadhaar based system, vaccine rollout through the COVID app, Atmanirbhar Bharat, infrastructure, digital infrastructure, and expenditure management reforms. On the side of growth returns, at that time we focused on the structural reforms that were implemented. However, as of now, we are talking about macroeconomic stability and how we can persistently deal with the global economic shocks that are seen. Coming on to the fiscal development in India. Now, under the fiscal development, we would be focusing on the state government and the debt profile of the government. So, improving the fiscal transparency and bringing in a realistic picture for individual is important. In line of this, few developments have been made. One is shifting of the budget cycle early to 1st February, then merger of the rail budget and the general budget together, removing the classification where we had a difference between the plan and the non-plan expenditure. Now this has been merged into one, and more emphasis has been given on revenue and capital classification. So those are some of the important highlights. And then we have seen that India's debt and deficit ratio have not only been one of the reasons that we need to understand the pandemic struck period, but we also need to understand that the growth contractions, how they have performed, and the ongoing stresses in the financial system, how would they affect the GDP in India. Coming on to the developments on the other side, the monetary developments, the liquidity conditions have been important. The developments in the government securities, banking sector, so green bonds have been released recently, which we would again talk under climate change in our second part. Gift City has been established. Non-banking financial companies have started to recover. So recently, if we talk about the trading in the secondary market, we have seen 25% in the buy deals and 24.8% in the sell deals by the private sector bank. This has been followed by foreign banks, public sector primary dealers, and mutual funds. So again, a very important topic, most important topic for your upcoming exam is cryptocurrency. So the crypto assets which have been newly devised, their market had been very volatile, and there has been a huge swing in the amount of valuation of the cryptocurrencies. Now different regions have brought different rules for them. For example, in the European Union, there is markets in crypto assets which is known as MICA. It talks about focus on stable coins. For cryptocurrencies and other wallet providers, there is notification and licensing regime. In Japan, by the Japan Financial Service Agency, the regulations for the cryptocurrencies have come up. They also focus on the operational risk and the cyber security management. In Switzerland, the Swiss Financial Market Supervisory Authority has been responsible for the same. So three categories of tokens have been introduced: payment token, utility token, and asset tokens. In Albania, it is by the DLT based financial markets, which has been known as the fin token agent. In Nigeria, it is by the Central Bank of Nigeria, where the crypto assets are not legal tender, and therefore in 2021 they have brought in a regulation that deals with cryptocurrency and the service providers for the same. Now coming on to the India's picture, we have brought various schemes. For example, Ayushman Bharat, to cover the families who have an income less than who are in the vulnerable section, and they would be provided a coverage of rupees 5 lakh per family, per beneficiary family, and that would be on a yearly basis. Similarly, there is Pradhanmantri Suraksha Bima Yojana for 2 lakh coverage for accidental death, 1 lakh coverage for partial disability. Jeevan Jyoti Bima, which covers 2 lakh credit for the saving banks account holders in case of death of the insured person. Vaya Bandhan Yojana, that talks about income security to senior citizens who have been linked under the government based LIC scheme. Then you have the Pradhan Mantri Fasal Bima Yojana, that talks about insurance to the farmers, and that checks the swings in the climate and the impact on that. Pension was another important topic. So ex gratia of 1,000 was given to nearly 3 crore poor Indian citizens, senior citizens, widows, and disabled during the 3 months of the pandemic lockdown. Then we have the NPS corporate sector model, which was released in 2011, and that is to provide NPS to the employees of corporate entities, including PSU. Digitization of the insurance market, increased flow in the capital, long-term capital is some of the important topics. Then price and retail inflation is again important. The domestic items, the fuel price, the convergence of the wholesale price and the consumer price index, and the monetary policy. Now the details on these, what are the various money forms, M1, M2, M3, what is inflation, we have covered in our complete GS course in the link below, so you can refer that. Now if we talk about the inflation rate in the advanced economies versus the emerging economies, in the emerging economies it peaked up to 9.9% and then declined to 8.1%, which is significantly higher. However, in the advanced economy it peaked up to 7%, and at present it is at 4% inflation. So the figures are extremely high for inflation. If we talk about the inflation, there has been a significant inflation in food, clothing and footwear, in household services and goods, miscellaneous activities, but there has been a decline decline in the inflation in healthcare, but a significant increase in the education. Personal care products again have seen an increase. Now, government has talked about bringing a curb onto it through the essential commodity market. So, on cereals, the wheat flour export was prohibited. The export was permitted subject to certain restrictions only, and this was mainly for wheat. Maida and suji were allowed after the later approvals. Similarly, for the pulses, price stabilization was released, and this was a significant development. There was import of tuar and urad under the free category, which was extended till 2023 March, and therefore there has been discounted distribution to the various welfare schemes, which is again an important aspect. Now, how current inflation is different from the inflation that happened in 1970s. Now, one of the important things that we understand here is at that time there was a global oil crisis. Right now, besides the oil prices rising, there are other issues that have come into account. The oil price rise is there, but it is proportionally smaller than the 1970 crisis. So what are the other factors? The other factors are the prices of the non-oil energy, agricultural goods, fertilizers have soared well above the pre-pandemic level, and that is again responsible for it. Similarly, there have been global inflation which has affected the domestic inflation, and therefore a higher pace of inflation has been witnessed. Price rise has been witnessed across various essential commodities as well. And the third important thing is the commodity rise has been there, and that is because of the fluctuations and the changes in the global supply chain. So since the global supply chain is not persistently moving forward, there have been inflationary pressures there have been pressures because of the Ukraine crisis. So again, the global production of wheat is at its low, and therefore there have been indications for price rise. So inflation, the reasons for the inflation in 1970s versus the present have been little different, and those are what we have covered here. So this was the first part of our economic survey section that we have covered. In the next part, we would be discussing social infrastructure and climate change, two of the very important elaborate topics. Social infrastructure has nearly 72 pages in economic survey. We have tried to gist out the most important ones among those. So cover the second part extremely carefully, very important, and the terminologies across the first part of economics we have covered in our economics video tutorials for general studies, which are available separately on the link below at Doorstep Tutor. Wish you very good luck.